If you look at the equity market, you will notice that it's volatile, meaning that it goes up and down at times. So it is foreseeable whether it is bullish or bearish move. If you want to understand market, we must first comprehend the policies implemented by the United States of America. The question is, why am I talking about the United States of America? Because the US market capitalization exceeds $60 trillion and it accounts for more than half of the world market capitalization. The United States continues to hold the world's greatest GDP with a GDP of $30.34 trillion in 2025, accounting for around 26.11% of global GDP. The major issue is that as of March 6, 2025, the US federal government debt is $36.56 trillion, a substantial increase from $5.674 trillion in 2000. Donald Trump, the new American president, popularized the slogan "Make America Great Again" and began modifying policies. New US Treasury Secretary Scott Bessent has encouraged President Trump to follow 3-3-3 policies, which would reduce the budget deficit to 3% of GDP by 2028. Deregulation boosts GDP growth by 3% while producing an additional 3 million barrels of oil or equivalent. So, the United States is imposing tariffs and things are getting pricey. The US administration wants crude oil price to reach $50 per barrel to limit fuel uses. In the United States, manufacturing contributes only 10% of GDP, a significant decline from the 1950s through the 1970s when it comprised 21 to 25% of GDP. So, they focus on the manufacturing and the energy sectors to create more jobs and become self-sufficient. The US administration announced one after another tariffs and the US stock market fell, affecting other emerging markets also, including India. Now, we need to know that India's growth story is intact. Inflation is low, GDP is rising, the government has increased liquidity, and there is a possibility or chance to generate earning. Again, if we comparing India to China, China's EPS growth has been only 10% over the last decade, whereas India's growth has been 169%. Foreign institutional investors are withdrawing money due to India's value, and which is slightly higher than China. However, all indicators point to the fact that FII prefer China for trading, not for investing, and for investing, India is the ultimate destination. If we look back, in the year 1991, India's market capitalization was just rupees 2 lakh crores, and the economic reforms undertaken by former Prime Minister P.V. Narasimha Rao's government, led by Manmohan Singh as financial minister, were watershed movement in Indian history. Then FIIs or foreign institutional investors and the private sector began to arrive, and the Indian economy and stock markets expanded significantly. If you observe, then this year when the equity market reached its pinnacle, the Indian equity market capitalization was rupees 450 lakh crores. Unbelievable, but it's true. So, India's growth story is intact. Now is the perfect time to invest. And the question is, where should you invest? One should invest in the sector or theme on which the government concentrates. The government focuses on the energy industry, and you should be aware that India is on course to meet its 500 gigawatt renewable energy objective by 2030 with investment commitments of rupees 32 lakh crores. India currently consumes 238 gigawatts of energy, which accounts for 45% of total consumption, as the industry is expected to be worth $340 billion by 2050. And if you look, in this year's budget, government has increased investment in the energy sector, allocating more than rupees 10,000 crores. Now the question is, why should you invest in the energy theme? Because to long-term growth, innovation, sustainability, and policy reforms, the Nifty Energy Index returns have demonstrated high durability. It has outperformed the Nifty 50 TRI in 6 out of 10 years, and this trend is expected to continue. And a big portion of it, the profit pool inside the energy theme, has expanded over time. 3 industries have played a major role: oil and gas, power, and capital goods. If you observe closely, you will notice that the profit pool in the oil and gas industry increased by 3.4 times between March 2014 and March 2024, while the power sector increased by 2.4 times and the capital goods and ancillary sectors have increased by 8.1 times. Overall, the profit pool for the energy theme increased by 3.3 times. So, the energy sector is a priority this year, and Kotak Mutual Fund has introduced an NFO, the Kotak Energy Opportunities Fund, with a NAV value of Rs 10 per unit, which began on April 3rd and will end on April 17, 2025. It is an exciting offer. If you wish to participate or invest in the energy topic, please contact us without any further delay. Myself, Mrinmoy Chakraborty, an investment and insurance consultant. If you derive some value out of my video, then please subscribe my YouTube channel and share it to the other people so that they can be benefited. And if you want to invest or if you want to discuss something, then you will feel free to contact me anytime at the following details. Thank you.